Should you buy a home or rent? This video will compare the two from an investment perspective. Of course, there's always non-financial reasons why you may prefer buying or renting, but those are covered a lot and I will just be going over the decisions as an investment. And I wanted to compare buying and renting a comparable home, not a cheaper rental, then run the numbers and compare results over a shorter time period of 5 years and for a longer time period of 30 years as to which would be a better investment over those time spans and see if there's a difference.
I don't get it.
I bought it.
The first thing to remember when you buy a home is that you're putting money down up front, which if you rent instead, that is money you can use to invest. And as we see over the long term, the S&P 500 does outperform real estate in the US. From 1928 to 2021, with dividends reinvested, the S&P 500 had an average return of just over 10%. And in the same time period, home values in the US rose at an average rate of 4.2%. These are both nominal returns, so neither of these are adjusted for inflation. And these are the numbers that I'm going to use going forward. So any money invested will return 10.07% per year, and the home that is purchased will increase at 4.2%. Future returns may be totally different, but these are the historical averages, so that's what I'm going to use. For this example, we're going to buy a $200,000 home. We're going to assume closing costs of 3% and a 20% down payment. And to rent, you have no money down. So the cash available to invest from day one for the renter is $46,000 versus a person who bought a similar home. And then let's look at the ongoing expenses. And to buy, you'll have the mortgage, but you'll also have maintenance for replacing appliances, roofing, etc. You'll have property taxes and you'll have home insurance. To rent, you'll just have the rent as an ongoing expense. Some people do get renter's insurance, but this is usually pretty low and wouldn't change the results of either scenario that I ran, so I just left it out. So after the down payment, the loan is $160,000, and the average interest rate in the US around the time I'm making this was 5.6% and will amortize over a 30-year period, which gives us a monthly mortgage payment of $918. So to calculate the other housing expenses, first of all, I will increase the value of the home over the 30 years by the 4.2% average long-term growth rate in real estate that I mentioned earlier. The average property taxes in the US are 1.1% and average maintenance charges are 2%, and these will increase each year with the value of the home. Then the approximate US average homeowner's insurance for a $200,000 house I could find was around 0.8%, and I found that homeowner's insurance has been increasing at around 4.7% per year over the last 20 years. And then I used the tax rate for the median income in the US, which has a marginal tax rate of 22%. So now let's look at how I calculated the rent. Many owners will rent a home for 0.8 to 1% of the home's value per month. So I used 0.9% of the home value for the monthly rent and 12 times that to get the value for year one. But then the rent will increase with the value of the home over the 30 years. With those numbers in mind, over a shorter 5-year time period, let's look at how the renter would have ended up. We have the first year rent of the $21.6 thousand, and it increases each year as the value of the home goes up, and total rents paid of $117,000 over the 5 years. Now you have the $46,000 down payment that you could have invested, and assuming the long-term return of the S&P 500, and assuming you sell after 5 years, then after paying the 15% long-term capital gains tax, you'd have an after-tax value of $70,000 for a total loss of $47,000. Next, we'll see what would happen if you bought and sold the home over 5 years. But first, let's look at the specific numbers that will go into the overall calculation. As I noted, besides the mortgage, you would have the other expenses associated with owning a home, and all of those combine for the total housing costs I have listed here in red. And if you compare to the rent from each year, we see that the housing costs are lower. So in year one, there's a savings of $2,800 for owning a home, and that is money that the homeowner could invest each year. It's important to note this because it's a factor not mentioned in most comparisons. But if you are renting a cheaper place than the home you'd buy, then it would be more money to invest for the renter and could completely change the results of this scenario. And in many instances where people rent, they will be looking at a cheaper rental versus upgrading to a larger home. But in this scenario, I want to use a similar home to buy and a similar home to rent, and we should assume anyone who owns a home that is renting it out will rent it for above their overall expenses. And we'll pull in the numbers from the remaining 5 years. And you can see that the housing expenses increase except for the mortgage, and then the rent also increases. And because of the mortgage not going up, the difference in the total cost for renting versus buying goes up over time. And this highlights one reason why owning the home over the longer term becomes more beneficial than renting, because rents will always go up and only part of your housing expenses will go up. So with that $2,800 difference in year one, the home buyer can invest it. And we'll say they saved it up over the year to invest at one time, and assuming the same return of just over 10% on the S&P, over the next year they would have $3,100. And then after the second year, they would have that $3,100, and they'd also have the difference in expenses of $3,400 to invest going into year three. And those two figures combined would compound at the S&P average, and they would have $7,100, and so on for each of the following years throughout the loan. Let's look at how the numbers would add up if you bought and sold after 5 years. You'd have your original down payment and closing costs, you'd have interest and other housing costs, and then you'd have closing costs when you go to sell. And this figure is assuming 8% cost to the seller and is based on a home value that is higher than when they first bought. So total costs to buy and sell would be about $151,000. But you'd also have some gains. They would have the after-tax value of the investments we just went over from the difference in the housing and rent expenses being invested. Then they'd have their home equity, and if they itemized, they would have tax savings from deducting interest and property taxes. And the total value of these would be $123,000. For a total loss of $28,000 when buying and selling over the 5 years. And I want to point out that a lot of the home equity shown is from appreciation and the down payment, as the loan payments early on are a much higher proportion interest instead of principal, which is a factor that hurts the home buyer when comparing to the renter in the shorter time span. But let's compare this to renting after 5 years, which shows that in this specific scenario, buying over the short term is a better investment. But there are many variables that could change. Maybe you don't itemize your taxes or will rent a cheaper place.
For the scenario I ran, the break even for buying versus renting is having the home for at least 3 years.
But let's look at what happens long term. We see the cost of rent going up each year, and after 30 years, the total rents paid would be $1.25 million. The original down payment and closing costs invested over 30 years in the S&P would have grown to an after-tax value of $702,000. And this is assuming you sell it all and pay the long-term capital gains tax at once at the end of the 30 years. The total loss on renting would be about $550,000. Looking at the buyer over the 30 years, they'd have the original down payment and closing costs, plus the interest on the life of the loan, the other housing expenses which increase each year, and then the closing costs based on the value of the home at the end of the 30 years. And they paid a total of $728,000 to live in the home for 30 years, so much more than $200,000. But looking at the after-tax value of the invested funds from the difference in the housing and rent expenses, and that amount alone is now over $1.3 million, which is also more than the value of the home, which grew at 4.2% per year. And then, if they itemize, they have tax savings of $66,000, and these would add up for a total value of $2.1 million, for a total gain of $1.3 million. Now, in practice, many people don't invest these amounts over their housing expenses, but theoretically, if they did, this is what they could have.
And maybe in 30 years, 1.3 million will still be able to buy something.
And comparing over the long term, you can see that buying the home would put the buyer about $2 million ahead of the renter. Again, there are scenarios where renting can be a better investment over the long term, and there's also non-monetary reasons why you may not want to buy. But over the long term, with two comparable homes, buying the home will likely be the better investment money-wise. And that's the video. Like, subscribe, whatever other button is down there, hit that too. And thanks for watching.